Welcome to the deep dive. You know, in the whirlwind world of digital assets, it's incredibly easy to get swept up in the daily noise. Feels like you're just reacting, right? But today, we're stepping back. We're looking at Bitcoin's recent market action. On the surface, yeah, things might seem a bit quiet, almost stagnant. But underneath, well, we're seeing a really compelling story unfold. Our mission today is to unpack what we're calling the Great Divergence. That's this fascinating split you see between Bitcoin's everyday price movements and the foundational shifts happening behind the scenes. Shifts that are truly shaping its future. This isn't just a lull. It feels like a pivotal moment, and we're going to reveal why. Okay, let's unpack this. So let's start with Bitcoin's immediate market state. Looking at the charts, it's definitely been in a period of consolidation, what we call range-bound trading. We've seen it retesting that crucial $110,000 support level.
Right, after that earlier sell-off pushed it down.
Exactly, down to a 7-week low. So for many, it probably feels a bit stuck maybe. What are you seeing in that day-to-day movement?
Yeah, stuck is a good word for it right now. If we zoom in like the last 24 hours, Bitcoin has basically been bouncing around in a pretty tight corridor, specifically between $110,000 and about $113,300. And we've seen multiple attempts to rally past that $113,300 resistance.
Right.
But each time, sellers have stepped in pretty decisively, pushed it back down. That tells us, in the short term, sellers still have the upper hand.
So that resistance is holding strong.
It is. To really shift momentum, we'd need to see a convincing break above that $113,300 mark. And technically speaking, while $110 is the immediate support, the broader, more critical line that analysts are really watching is $109,000.
Okay. $109K.
Yeah. If we see a breach there below $109,000, it could definitely trigger a more significant short-term correction. That's a key number. Keep it in mind.
It's interesting because, well, what you're describing sounds a bit bearish for the immediate price action. Sideways to maybe down?
Short-term, yes.
But then, when I look at the on-chain data, the blockchain transaction record itself, it tells a surprisingly more constructive story.
Exactly.
It's almost like two different narratives playing out simultaneously. Why is that?
It's a great observation, and it highlights that great divergence perfectly. For the first time in 10 days, crypto exchanges actually recorded a net outflow of Bitcoin.
An outflow, okay.
Yeah, we saw about 192 BTC moving out of exchanges and into private wallets. Now look, 192 BTC isn't a huge number in the grand scheme.
Right, not massive.
But its significance is in what it indicates. It suggests some investors are clearly using this price dip as an accumulation opportunity.
Buying the dip and moving it off exchange.
Precisely. Moving their Bitcoin into cold storage, offline, secure wallets likely for long-term holding. This reduces the immediate supply available on exchanges and, crucially, eases that sell-side pressure.
Makes sense.
Plus, we're seeing robust network activity. Confirmed daily transactions are holding strong, consistently between, say, 510,000 and 575,000. The network is busy.
So, okay, we have this intriguing split. Price is struggling a bit, consolidating. But the underlying network health, some investor behavior, it suggests something much more robust is quietly happening.
That's a divergence.
Which, begs the question, who are the big players really buying into this story? Because when you look at institutions, that's where the tug of war gets seriously intense.
It truly is. And a major development here is the significant role U.S. spot Bitcoin ETFs are now playing.
Oh yeah, the ETFs.
These regulated investment vehicles are often rivaling even major crypto exchanges in daily trading volume. We're talking billions of dollars on active days.
Billions.
This represents a fundamental structural shift.
Right.
Regulated products are fast becoming a primary source of liquidity and price discovery for Bitcoin. It's mainstream finance really embracing crypto now.
And the flows into those ETFs, I heard they picked up again.
They did. After a period of outflows, we've actually seen capital return. Just last Thursday, there were $179 million in inflows.
Okay, positive flow.
And that marked the 4th consecutive day of positive flows. So over $571 million in just those 4 trading days.
Wow.
It clearly signals renewed institutional interest, a willingness to accumulate at these current price levels. They're seeing value here.
That's powerful validation. And it's not just capital flowing in. We're seeing Wall Street itself starting to, change its tune a bit.
Definitely.
I mean, when JP Morgan, a giant in traditional finance, puts out a research note stating they believe Bitcoin is undervalued by approximately $16,000, That feels significant, doesn't it?
It absolutely is significant.
What's behind that kind of statement from them?
Well, what's fascinating here is their rationale. They're basing this on Bitcoin's maturing risk profile.
Maturing risk. How so?
Its 6-month rolling volatility, basically how much its price swings, has fallen to a record low of about 30%.
30%? Wow, down from what?
Down significantly from nearly 60% at the start of the year. And what's truly groundbreaking about this, you see, is that this structural decline in volatility allows traditional asset allocation models to actually be applied to Bitcoin.
So they can treat it more like a traditional asset in their models.
Exactly. JP Morgan's analysts are now framing Bitcoin as a macro asset. They can model it relative to gold based on its volatility. Their projection is, look, if Bitcoin's volatility continues to decline and converges with gold's,
Right.
its market cap would need to increase by about 13% to match gold's $5 trillion in private investment on a volatility-adjusted basis.
Okay, comparing risk-adjusted positions.
Precisely.
Right.
And that calculation yields an implied price target near $126,000.
$126,000.
Now, this isn't just about a number. It provides a clear, defensible roadmap for conservative institutional investors.
Right. A justification.
It justifies including Bitcoin in their portfolios. It's essentially saying, look, Bitcoin is maturing. We can analyze it with our established risk models just like gold.
That truly gives it a stamp of mainstream validation. And this leads us nicely to the corporate treasury thesis, which feels like it's really becoming a global movement now, evolving far beyond just a U.S. thing, like a quiet corporate arms race for Bitcoin.
Exactly. And if we connect this back to that declining volatility, corporate treasuries often act as these very passive long-term holders. Think of it like a company hedging its balance sheet.
Right. Not for quick trades.
No, taking a portion of its cash, putting it into Bitcoin as a strategic long-term asset, protection against inflation or, currency weakness, and beyond MicroStrategy, which everyone knows.
The pioneer.
Right. A key international example now is Metaplanet Inc. It's a publicly listed Japanese firm.
Asia's MicroStrategy. I've heard that.
That's the one. They're aggressively accumulating Bitcoin, specifically as a hedge against the persistent weakness of the Japanese yen.
Makes sense given the yen's performance.
Absolutely. Metaplanet announced plans to raise roughly 116 billion yen, that's about 745 million US dollars, to acquire up to 21,000 BTC by the end of 2026.
Serious commitment.
Very. And this isn't just validation in a major new economy. It also provides a tax-advantage way for Japanese investors to get Bitcoin exposure through a stock.
Interesting angle. What about back in the U.S.?
Well, on the U.S. side, we have American Bitcoin. It's a mining and holding company, notably backed by Donald Trump's sons.
Okay.
It's preparing to go public on NASDAQ, ticker ABTC, likely in early September.
ABTC, got it.
Now, reporting this neutrally, the significance here is its mandate. It's a public company whose express purpose is to accumulate a strategic Bitcoin reserve.
So a pure play Bitcoin holding company on NASDAQ.
Exactly. Creating a new, highly visible channel for capital to potentially enter the Bitcoin ecosystem.
Okay, so we've got institutions finding new ways in, corporations using it strategically. Let's shift gears now. Let's look at the broader macro picture and the regulatory landscape. These are also shaping Bitcoin's path.
Absolutely crucial factors. A significant piece came just this morning, actually. The release of the U.S. Personal Consumption Expenditures Price Index, the PCE data for July. This is the Fed's preferred inflation gauge.
Right, the PCE. What did it show?
Well, both core PCE, which strips out food and energy, and the headline PCE came in largely as expected. They matched analyst forecasts.
So no big surprise.
Pretty much in line. Core PCE was up 0.3% month over month, 2.9% year over year. Headline PCE up 0.2% month over month, 2.6% year over year.
Okay, and the significance for Bitcoin is?
Well, the significance is that these inline figures are unlikely to change the Fed's expected path.
Meaning rate cuts are still likely.
Exactly. If the reading had been hotter than expected, it might have reduced the chances of a rate cut, which could hurt risk assets like Bitcoin.
Got it.
But with the data meeting forecasts, market expectations for a 25 basis point interest rate cut at the Fed's September meeting remain high, still priced at over 85% probability.
Okay.
And this outlook for easier monetary policy is generally seen as a supportive tailwind for Bitcoin, suggests more liquidity could flow into risk assets later this year.
Although it's an interesting day to sort out sentiment because pre-market was positive after the report.
It was.
But then New York trading saw prices dip. So the market's still digesting things.
Yeah, immediate reaction isn't always the full story.
But it's not just economics. We're actually seeing a pretty significant shift happening in Washington, too, regarding digital assets, almost moving from just observation to active adoption, maybe.
That's a crucial point. The CFTC, the Commodity Futures Trading Commission, they announced that offshore crypto exchanges can now legally serve U.S. clients by registering under the Foreign Board of Trade framework, the FBOT framework.
FBOT. Okay, what does that actually mean?
Think of it as a clear, formal on-ramp. It allows international exchanges to legally serve U.S. clients, bringing more competition and liquidity into the market, but under defined rules.
So more regulated choice for U.S. investors.
Exactly. It sounds bureaucratic, but it's a big deal for market maturity and access. And on another front, the SEC is expected to decide, perhaps as soon as late September, on new generic listing standards for commodity and crypto ETFs.
Generic standards, how's that different?
Well, currently, each new crypto ETF goes through this long, bespoke approval process. Very specific.
Right, one by one.
This proposed rule change would streamline that. It would allow crypto-based ETFs to be approved more like regular ETFs.
Okay. Faster, easier.
Potentially, yes. If approved, it could effectively open the floodgates for a diverse range of crypto assets like Solana, XRP, maybe even Dogecoin to be packaged into regulated investment vehicles.
Wow, that would be huge.
There's already a pipeline of 92 crypto-related ETPs reportedly in development waiting for something like this.
92. Okay. But beneath all these big headlines, adoption ETFs, there's this critical underlying regulatory battle being waged, too, over permissionless innovation. What's at stake there?
Yeah, this raises a really important question about the very future of software development in the decentralized world. A broad coalition, over 100 crypto companies and tech groups, they sent a warning to the Senate Banking Committee.
A warning? About what?
They said they won't support a pending crypto market structure bill unless it includes explicit federal protections for software developers.
Protections from what?
Their main demand is to shield people who write and publish open source, non-custodial software, meaning software where the user controls their own keys, their own funds.
Right, like many DeFi protocols or wallets.
Exactly. They want to ensure those developers aren't misclassified as money-transmitting businesses under federal law.
Because that carries huge regulatory burdens.
Massive burdens. Obligations designed for financial intermediaries, not software writers. The outcome of this debate will fundamentally shape how permissionless innovation can even happen in the U.S. going forward.
So, okay. Bringing it all together, what does this all mean for you, the listener, and for Bitcoin itself? It really does feel like this great divergence we started with.
It really does.
You have the apparent quietness, the consolidation in Bitcoin's price.
Yeah, the sideways chop.
And then this very tangible, fundamental progress on the institutional front. The macro backdrop looking potentially more supportive, and these huge regulatory shifts happening.
Yeah.
It feels like the price is lagging the underlying story.
I think that's a fair assessment. On one hand, you've got those near-term headwinds, right? The price struggles, failing to reclaim key resistance.
Need to hold 109K.
Absolutely critical to hold 109K support to avoid a deeper correction. But on the other hand, the tailwinds look pretty powerful. You've got the inline PCE data reinforcing hopes for a Fed rate cut in September. Generally good for risk assets. We're seeing those consistent ETF inflows, again, suggesting institutions are buying this dip. And then JP Morgan's bullish valuation gives a sort of long-term anchor, that $126,000 target based on falling volatility.
Well, the consolidation looks healthy.
Yeah, the current price action seems like a healthy consolidation, especially after some excess leverage got cleared out earlier in the week.
It truly paints a picture of maybe underlying strengths during a quiet patch.
Yeah.
So looking ahead, what should you be watching for? How do you navigate this? What are the key signposts?
Okay, let's break it down by time frame. Short term, meaning the next few weeks.
Yeah.
Keep a close eye on those technical levels. $109,000 support is critical. A recovery above $113,300 is what bulls want to see to signal an uptrend resuming.
And the ETF flows.
Definitely. Watch the daily ETF flow data. That's your real-time gauge of institutional sentiment right now.
Okay. Medium term, say the next few months.
Medium-term regulatory catalysts are huge. That SEC decision on generic ETF listing standards expected late September, that could unlock a new wave of capital into crypto more broadly.
Right, beyond just Bitcoin.
Exactly. And the NASDAQ debut of American Bitcoin, ABTC, that'll be a crucial test of public market appetite for these Bitcoin-centric stocks.
Okay, short and medium term covered. Long term, a year plus.
Long term, looking a year or more out, The biggest driver is simply the continued institutionalization of Bitcoin, the growth of ETFs as primary liquidity sources, the expansion of corporate treasury adoption globally.
Metaplanet being an example.
Right. And its increasing acceptance as a legitimate macro asset by Wall Street, like we saw with the JP Morgan analysis, these factors over time should structurally reduce volatility and really solidify Bitcoin's role as a global non-sovereign store of value.
So, while the daily price charts can feel like a roller coaster, and they often do,
Yeah.
the deepest currents seem to show that the foundational architecture for Bitcoin's future is being built brick by brick right now, right before our eyes. The question isn't just if this continues, but maybe how swiftly these underlying shifts will ultimately manifest in Bitcoin's global role and, yes, its price. Keep watching, because this story is definitely far from over.